Peace and love, good people. Peace and love. Let's get right into the Bollinger Band. So the Bollinger Bands are an indicator that I became familiar with when I first learned to sell options. All right, before I understood oversold and overbought, or really had any understanding or introduction to the RSI or the wide or narrow state, I was using the Bollinger Band to help me determine when to sell a call and when to sell a put. All right, so I would sell calls after I would sell a call when I was feeling bearish, and I would sell a put when I was feeling bullish, because my goal was to just collect the premium and never either get my shares called when selling calls, meaning to be forced to execute my contract and sell my shares at the given price, or never were put the shares, meaning I would collect the premium, but I would never be forced, or I would never be obligated to buy the actual shares at a discounted price, because I used the Bollinger Band, and this particular indicator helped me to collect premium and avoid having to move shares. All right, so implication: bullish when the price closes more than 2 standard deviations. Remember, standard deviation, we learned this in statistics in high school, below the 20 period moving average of price, a bullish event is generated. Bearish when the price closes more than 2 standard deviations above the 20 period moving average of price, a bearish event is generated. Okay, so let's just break that down really quick. The 20 period moving average, the average is the fair price in the middle. All right, the average sales price. When the price closes more than 2 standard deviations below the 20 period moving average. So if the average is 60, if we close below the moving average, that means we're closing around 20. So that means we're below average. So we're going to work back up toward the average. Okay? When the price closes more than 2 standard deviations above the average, now we're bearish, because we're going to come back down to the average. So if it closes at 80 and the average is 60, then we're likely to move back towards 60. If it closes at 20 and the average is 60, we're likely to move back toward 60. That is a gem, a jewel. Sound the alarm, make some noise. Burn, 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 burn. Give me something, because you need to take note of that right there. That's a game changer. Now, Trading Central identifies a Bollinger Band event based on a condition of price overextension leading to an expectation of reversal. I just said that, just not as nice and concise. Some enhanced interpretations of Bollinger Bands require secondary inputs such as RSI, I said that, to validate a continuation or reversal position strategy. All right. Again, you don't want to get in the habit of having to consult 73 indicators before you make a decision, because by the time you get 36 confirmations, the price is gone and now you're chasing it. All right. So we don't want to chase. Refer to the trading consideration section below for further information regarding enhanced strategies for Bollinger Bands. Okay, so we're going to get down to the point where they break it down for us. All right, but let's look at the history of the Bollinger Band. The Bollinger Band developed in the early 1980s by John Bollinger. Bollinger Bands were one of the first adaptive volatility envelope tools. Rather than fixed percentage envelopes being drawn above and below the moving average, Bollinger Bands are calculated based on the standard deviation of an instrument's closing price. Listen, take a step back away from all of the information and go look up standard deviation and read about standard deviation so you can understand the crux and the core of what's happening in the market with the prices, the buying, the selling, the supply and demand. Bollinger Bands use standard deviation and a simple moving average to help traders determine buy and sell events, or to help confirm other patterns. A price chart that uses Bollinger Bands displays 4 lines: price, the upper and lower Bollinger Bands, and the moving average. All right, so a price chart that uses the Bollinger Band displays 4 lines: the price, the upper and lower Bollinger Bands, those are the bounds, the outer bounds, the top and the bottom, and then the moving average. All right. The upper and lower Bollinger Bands typically appear 2 standard deviations above and below the 20-day moving average. The Trading Central supports these typical settings. For shorter term trends, some technical analysts prefer 1.5 standard deviations with a 10-day moving average. For longer term trends, a 2.5 standard 50-day moving average may better suit their purposes. Okay, so the Bollinger Band is customizable, but you have to be intentional and know what you're doing. If you don't, let's leave it at the default setting of a 20-day moving average with 2 standard deviations above and below. All right. The purpose of the Bollinger Bands is to provide an indication of high and low price range. By definition, prices will be high at the upper band and low at the lower band. Price tends to bounce between the upper and lower Bollinger Bands, but touches or penetrations can be tradable. All right, so price tends to bounce between the upper and lower Bollinger Bands like support and resistance, but touches or penetrations can be tradable. The expansion or contraction of the band's width around the moving average indicates periods of high or low volatility, respectively. Okay, so the expansion or contraction of the band's width around the moving average indicates, okay, so that's going to also help us understand the volatility, how many people are trading the instrument. Trading considerations. There are several successful trading strategies that are used in conjunction with the Bollinger Bands. Typically, they involve monitoring the price action after a Bollinger Band penetration or reference to a secondary indicator or oscillator to qualify the potential for a continuation or reversal of the present price trend. Some traders watch for a succession of Bollinger Band touches to track upside or downside momentum. Periods of rising price volatility lead to a widening of the Bollinger Bands. Okay, so periods of rising price volatility lead to a widening of the Bollinger Bands, and conversely, like it's breathing in and out, like a breathing mechanism. Low price volatility causes tightening of the bands. Because there is a tendency for bands to alternate between expansion, what expansion would be like a big exhale, blowing up the balloon, and contraction phases, inhaling, shrinking the balloon. Some traders look for unusually wide bands and interpret that as a sign of trend reversal. Okay. Conversely, extremely narrow bands can be an indication that supply and demand are in a fine state of balance and can be easily upset, potentially leading to the initiation of a new and powerful trend move. Okay, so this is super complicated. Shout out to Oliver Velez for simplifying this for me, because I better understand because of those explanations. Both John Bollinger and the classic text, The Technical Analysis of Stock Trends by Edward and McGee, suggest using Bollinger Bands penetrations as signals that are qualified by another indicator or oscillator. A common Bollinger Bands and relative strength index based strategy is, okay, so there's a strategy where you use the Bollinger Band and the RSI. Okay, the Bollinger Band and the RSI. When price touches or penetrates the upper Bollinger Band and the RSI is below 70, it is an indication that the trend will continue. Okay. Conversely, when the price touches or penetrates the lower Bollinger Band and the RSI is above 30, it indicates the trend should continue. Okay. So people are using the Bollinger Band and the RSI to let you know whether or not the trend is ending or if we will have continuation of the trend. If a price touches or penetrates the upper Bollinger Band and the RSI is above 70, possibly approaching 80, the trend may reverse and decline. On the other hand, if a price touches or penetrates the lower Bollinger Band and the RSI is below 30, possibly approaching 20, it indicates the trend may reverse and move upward. In technical analysis explained by my boy Martin J. Pring, suggests that you can determine whether a price reversal is imminent by observing how price behaves following the initial Bollinger Band crossing. He states, if the price makes several failed attempts to cross or touch a band, but in doing so traces out a classical reversal price formation, you can expect a price trend reversal. I don't feel like that's that fire of a tip. Let's read that again. In his book, Technical Analysis Explained by Martin J. Pring, Pring suggests that you can determine whether a price reversal is imminent, like unavoidable. It's about to happen. All right, so he believes that you can use this strategy to determine a price reversal by observing how price behaves following the initial Bollinger Band crossing. All right, so if the price, instead of bouncing off of the Bollinger Bands, if the price crosses it, if the price makes several failed attempts to cross or touch a band, but in doing so traces out a classic reversal price formation, you can expect a price trend reversal. In Master Swing Trader, Alan S. Farley suggests that a move that leads to a price bar extending over 50% beyond the Bollinger Band is overextended and encountering resistance and thus overdue for a reversal. This is the interpretation that Trading Central implements. Okay. All right. So thank you for that. So I don't know. Webull Learn versus Trading Central. I guess they partner together and they are delivering the goods. All right. And I'm picking up what you guys are putting down for sure. So I like that. I would give this a 5-star review because it gave me, a 5-star breakdown because I already knew about Bollinger Band and the RSI, but it has allowed me to understand how you can use a Bollinger Band RSI strategy that will help determine whether a price reversal is imminent. All right, peace and love. I hope you get rich. I hope this video was helpful. Let's get to 1,000 subscribers ASAP. We at 400. Okay, we are moving on up. All right, so let's get 500 subscribers by Friday. I need your help. Share this please share this video in an investment group that allows you to share videos. It's a bit difficult to get the word out and share these videos because a lot of threads and groups don't allow you to post your video. So if you're familiar with any groups on Facebook, Instagram, Snapchat, TikTok, whatever you got. I'm not that versed in all of the different social medias. I just do this. So if you can help me out, spread the word, send this video to somebody you think will benefit, I would truly appreciate that. Peace and love. And without further ado, I hope you get rich. Take care.